When I first started investing, all I ever heard from people was, you should invest in Vanguard Funds. And I would be like, I don't know what those words mean. When I was just starting out, it was confusing. Like, I didn't know what anything meant. I didn't know what one was compared to another or what I should be investing in. I mean, what's the difference between the total stock market fund and the S&P 500 fund? Should I buy the fund or the ETF version? What's an ETF anyway? Shouldn't I buy a target retirement fund instead? Wait, I thought Vanguard had those too. So in this video, we're going to go through all that and more. So by the end, you'll be able to answer all those questions for yourself and not have to struggle through it the way that I did. We're going to break down the 4 major Vanguard funds that most people have heard about. And it just so happens that all 4 of them have a mutual fund version and an ETF version available. And I know your first question is probably like, wait, how is an ETF different than a mutual fund? A mutual fund is an investment that can consist of a combination of stocks, bonds, or securities, and is managed by a professional money manager. And an index fund, which is what these Vanguard funds are that we'll be talking about, is a mutual fund that aims to track an existing index. The idea being that the fund just aims to get the market return, instead of actively picking stocks and securities to try to beat the market. And even though there are some very successful actively managed funds, index funds historically have created great returns and actually beat most actively managed funds. Okay, so that was a lot of information, but you're still wondering, so what the heck is an ETF? An ETF is an exchange traded fund, which is basically a mutual fund that trades like a stock. Instead of contributing dollars to a fund, you buy individual shares of a fund just like you would a stock. This means you can buy it from just about any brokerage account, and it trades all throughout the day like stocks do. All the funds we're talking about have an ETF version, so you might be wondering, well, which one should I buy? The mutual fund or the ETF, or how is it different? Let's break down a little bit of the differences and the pros and cons of each. So the main advantage with the mutual fund is that you can put pretty much any dollar amount into it without having to worry about buying a specific number of shares. Now, all these mutual funds do have a minimum amount that you have to invest, but once you're above that minimum threshold, every time you add more money into it, it can be in any dollar amount. So there are some potential disadvantages with the mutual fund route. The biggest one being that you pretty much have to always have an account with that mutual fund provider in order to invest with them. So there are mutual funds, obviously Vanguards are so popular, that you can invest with on other brokerages, but a lot of times you'll have to pay a fee, which really doesn't make sense when you can just do it for free with Vanguard. And then number 2, anytime you invest in a mutual fund, it only trades on the price at the end of the day. If you're looking at the prices during the day and you want to sell, you can initiate a sale, but it's not going to take effect until the end of the day with the end of the day price. So for most people, that's not a big deal because you're not trading throughout the day, but it is something that you have to be aware of. And then the last potential disadvantage going the mutual fund route is that, at least for these funds, they tend to have a higher expense ratio than the ETF version. So you're literally paying more money for basically the same return. So for ETFs, the benefits are basically going to be the opposite of those cons for the mutual funds. The expense ratios tend to be cheaper. You can basically buy them like a stock at any brokerage. So if you prefer to invest with Schwab or Fidelity, then being able to get the ETF versions of these funds is really easy and you don't have to pay a fee. In general, if I have a choice between a mutual fund or an ETF, I almost always pick the ETF. The only way that I won't is if for some reason the expense ratio for the ETF is way higher than the mutual fund, which I don't know that I've come across a situation like that yet. So hopefully that helps shed a little bit of light on the differences between a mutual fund, an index fund, and an ETF. And now let's dig into the 4 Vanguard funds so we get a better understanding of what they actually are. Number 1, the Vanguard Total Stock Market Index Fund, ticker symbol VTSAX. The Vanguard Total Stock Market Index Fund is basically a fund that tracks over 4,000 different companies of all sizes that represent nearly 100% of the U.S. investable equity market. The benchmark they use is a CRSP U.S. Total Market Index, has an expense ratio of 0.04%, has a minimum investment amount of $3,000, a risk level of 4 out of 5, and a 10-year return of 12.08%. Okay, but what does this actually mean? It means that you're investing in all the companies in the US stock market weighted based on their overall value. So from the largest, most valuable company like Apple, which makes up over 5% of the fund, to the smallest of the small cap companies that's going to make a fraction of a percent of the fund. So this fund is good for pretty much anyone who believes in the strength of the US economy and wants to invest in larger companies as well as smaller companies in the US market. So this can actually be a core holding in your portfolio as well. A quick tip, a core holding just means that this fund is used by many as a majority holding in their portfolio. The ETF alternative for the total stock market fund is ticker symbol VTI. VTI has an expense ratio of 0.03%. And while there's no specific dollar amount minimum, you do have to buy at least one share, which was priced at $204.43 as of January 31st, 2023. Has a risk level of 4 out of 5 and a 10-year return of 12.08%, which matches exactly to the mutual fund. Number 2, Vanguard S&P 500 Index Fund, ticker symbol VFIAX. So the Vanguard S&P 500 Index Fund is basically a fund that tracks about 500 of the biggest U.S. companies that represent about 75% of the U.S. stock market's value. The benchmark is obviously the S&P 500 index. The fund has an expense ratio of 0.04%, a $3,000 minimum, a risk level of 4 out of 5, and a 10-year return of 12.52%. Okay, so what does this mean? It means you're investing in the biggest 500 companies in the US, weighted based on their overall value. In my opinion, the S&P 500 Index Fund is really good for just about anybody as a core holding in their portfolio, but specifically it's for people who believe in the strength of the US economy and want to focus their investment on the 500 biggest companies. The ETF alternative for the S&P 500 Index Fund is VOO. VOO has an expense ratio of 0.03%, a minimum of one share, which is priced at $373.44 as of January 31st, 2023, a risk level of 4 out of 5, and a 10-year return of 12.52%. Number 3, Vanguard Total International Stock Index, ticker symbol VTIAX. So the Vanguard Total International Stock Index is a fund that tracks over 5,000 companies of all sizes in developed and emerging international economies outside of the US. Its benchmark is the FTSE Global All Cap excluding US Index. It has an expense ratio of 0.11%, a minimum investment amount of $3,000, a risk level of 5 out of 5, and a 10-year return of 4.06%. So you're basically investing in companies outside of the US to get investment exposure to economies all across the world. So who is this good for? So this is for people who want to diversify their portfolio and add some international stock exposure into it. Now, international stocks and markets tend to be more volatile than the US market, so this isn't a fund that should be a core holding. It should just be a smaller piece of your portfolio to add some exposure to other economies outside of the US. The ETF alternative for the fund is VXUS. It has an expense ratio of 0.07%, a minimum investment of basically one share, which was priced at $56.21 as of January 31st. It has a risk level of 5 out of 5 and a 10-year return of 3.97%. Number 4, the Vanguard Total Bond Index, ticker symbol VBTLX. The Vanguard Total Bond Index is a fund that tracks a broad market-weighted bond index, providing exposure to the taxable investment-grade US dollar-denominated bond market. The benchmark is Bloomberg US Aggregate Float Adjusted Index, has an expense ratio of 0.05%, a minimum investment amount of $3,000, a risk level of 2 out of 5, and a 10-year return of 1%. So in terms of what this means, you're basically investing in 10,000 plus investment grade corporate and government bonds. So in terms of who this is good for, anybody who wants to diversify their portfolio of stocks and maybe bring bonds in to provide a reliable income stream. In general, bonds are looked at as a lower risk investment that provide lower returns, but they can help provide income and maybe smooth out some of the volatility of stocks. The ETF alternative is BND. Has an expense ratio of 0.03%, a minimum of one share, which was priced at $74.22 as of January 31st, has a risk level of 2 out of 5, and a 10-year return of 0.99%. Now, I know that was just a bunch of numbers and a bunch of information, but hopefully it gives you an idea of how each of these index funds is different, so that when you start to look at what you want to invest in, you can start with, okay, what am I most interested in? Or what are things that are generally looked at as a core holding and which aren't? At the end of the day, it's important to just get started when it comes to investing. So even if it's not the perfect investment at the beginning, as you learn more and get more knowledgeable about what you like and what you really want to invest in, you can always adjust. So you might have heard of Vanguard Target Retirement Funds, and even though we didn't talk about them specifically, what we just learned actually helps you understand the target retirement funds as well. Because believe it or not, the target retirement funds are just built up of different percentages of the funds that we just talked about. So for example, if we look at the Target Date 2050 Retirement Fund, you can see that it's actually made up of the total stock market fund at over 53%, the international stock market fund at over 37%, the bond fund at over 6%, and then an international bond fund, which we didn't specifically talk about, but it's basically bonds from international companies and governments at 2.8%. And if you look at the other target date retirement funds that have different dates, you can see that they use the same 4 funds, but they just change the percentages to adjust the risk level depending on how close you are to retirement. So if we take a look at the Target Date 2030 fund, it's composed of the same 4 funds, but just in different percentages. The total stock market fund's a little over 37%, the international stock market fund is a little over 26%, the bond fund's at 25%, and the international bond fund is at over 10%. Since it's closer to retirement, it's weighted more heavily towards bonds and stocks, but it's ultimately the same 4 funds under the hood. Hopefully this video helped you guys understand the 4 major Vanguard funds and what they represent, so you can get started investing with a little bit less confusion. But if you guys have any other questions, put them down in the comments below. If you guys want more information about how to pick a fund that's right for you, click on this video right here where I talk about the 3 single fund portfolios that are great for beginners. Hope you guys have a great day out there. Thanks for sticking around to the end. Keep stacking those wins for your family, and I'll see you guys in the next one. Peace.